Hey guys, HitoryFX here. Welcome to the 22nd episode of the weekly market outlook with TRADEXPROP. Now, in this episode, I will be covering the dollar index, gold, and the S&P 500. Well, if you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord channel where you can talk to me as well as the TRADEXPROP team. Now, so last week we saw a pretty interesting week thus far. We saw, most importantly, the rate cuts come in from the Fed funds rate meetings, and that kind of had a slight impact on the markets, right? So it was slight because the movement wasn't crazy. We didn't see a lot of momentum in one side coming into the markets. Instead, we saw very short-term volatility, and then after that the markets just kind of ranged. So I'll break it down as we go down the time frames, as currently we are on the DXY monthly. So I think I'll just kind of break down what we're seeing here on the charts, and as we go down to maybe the daily time frame, we can kind of talk a bit about the fundamental workings of the news release in itself. Okay, so here we have the DXY monthly, and we start the same thing on every single pair, on every single time frame, right? We look at where we currently are in the current candlestick, as well as what we have been doing for the previous candlestick. So currently we are here, and this is the monthly candlestick, and it hasn't closed because next week is going to be the final week of the lifespan of this candlestick right here. And as of now, we are hovering around the 101 support right here. So I'm eager to see how we're going to close, or close around this area. Do we close beneath it, or do we close above it, respecting this support? Depending on what we do, if we do close beneath it, we could see potential shorts down into the 99.37 area of interest right here. Previously it was resistance all the way here. Price broke it with large momentum, and then when we come back to it, we kind of touch within this rejection area right here. So in theory, we could see price come down to fill in and retest this wick right here, maybe even coming down to this price point, since it was shown that it had a lot of areas of interest within that price point in itself. However, if we do close above 101.3 right here, we could be seeing the market respect this as support, and we could see price print bullishness to continue within this range of 106 as well as 101. So this range, we see price continue trading within this range right here, and I expect it to kind of form more structure as we come up into these highs to retest them, depending on how we trade, right? But as of now, there is a possibility that we could continue ranging within this price range if we don't close beneath 101.3. And if we do close beneath it, we could see price coming back down to retest this price range right here, right? So that's the monthly, right? I won't speculate. I'll just see if it aligns with what the weekly time frame is telling me, because as of now, the monthly hasn't closed. One more week, which is next week. So let's wait until it closes. Well, on the weekly, if you recall, previously, let's do like a quick recap. I stated that I wanted to see buys above this level 101.73 if we break it, and sells beneath 100.67, but we saw neither. Instead, what price did was it came down into this level and then it rejected it. Alright, so last week we closed in a rejection off of this support down here, and the key issue here is that it did trade in a large range because of the Fed funds rate, but it showed indecision, because if you look at the ratio of the body to the wicks, we kind of have a small body in comparison. And when you see how we have a small body, it means that price is kind of indecisive in where it wants to go. It's not showing you a lot of information on the current time frame on whether or not it wants to go up or down. It's just kind of stuck in the middle, and with that in mind, there isn't much we can deduce from just how this candlestick closed, right? So as of now, my bias is still neutral. However, we understand that we're coming into a support down from this large bearish range right here, so that could be something to keep in mind, that we are still overall pretty bearish. However, like I said, the trend will not last forever, and we could anytime see a reversal, but don't be calling bottoms. Okay, so say the analysis from last week still stands. If we if we see a break beneath, a break beneath 101.73, we could see price come down to now retest this wick in form of a wick fill around 100.21, and ultimately maybe down into this range around the 99.914 price range right here. We could see price come down to retest it if we close beneath it. Okay, but if we do come back up and then we trade and close above it, we could see price come all the way back into the 103.220 price range right here. This is an area where price kind of consolidated, and then it's found some form of reaction to that resisted price from going up. So we could come back up, retest it, and then see some short-term rejection lower. All right, so that is what I'm seeing for next week. But in terms of this range, let's measure how large it is. It is around 1,000 ticks. Okay, so 1,000 ticks is still not too bad. You could still definitely form trading ideas off of it onto the lower time frames. So let's go down into the daily time frame right here. So you can see that we are currently here, and we've been coming down like we saw on the weekly, and then we just started to range. All right, so as of now on the daily, there is also still not much we can see. I noted last week that if we saw price close beneath this level, we could see short-term sales down into 100.551. But the issue is that Monday kind of went and traded the entire range already. So quite frankly, it would have been ideal for you to take any trades within this range right here. Instead, what would have been ideal to happen was that if we broke above this area, we could see longs up into 101.773 last week, but we didn't see that. Instead, what we saw was price was just ranging and caught within this large mess on the daily, which is to be expected, because like I said last week in the outlook, that before a very important news release, likely the markets are going to range, and your best bet is going to be, quite frankly, to just play any short-term intraday longs or shorts, right? You don't want to be holding positions for too long, especially coming into something like the federal funds rate. Okay, so as of now, my analysis from last week, it still stands. If we see a break and close beneath 100.551, I'm expecting price to retest some of these weeks right here. We have this one and this one, but I understand that because the market participants, they see these long wicks, there is a high tendency for price to do something like a fake out. So I'd say if you have a position in mind, you might want to wait for more confirmation for longer swing term, like swing trades or position trades, because we could well see fake outs, right? Like this is obviously a liquidation of orders, including this one. We saw the market take out any sell side liquidity, and we saw the market take out any buy side liquidity on top in this 2 weeks. So this is now an area of, I'd say, like a wasteland. It's really dangerous, it's really scary. You could still take trades off of body closures below or above zones, but be prepared for a fake out. Okay, so on the off chance that we do see a fake out, you could now take longs to fill this wick. But let's say next week we continue to reject this reject this area right here, and we're seeing price trade up. You could now take longs instead into this area, and if we close above 101.057, we could now see potential longs up to fill this wick and maybe even to this area of resistance right here. And also measuring this range, it's a 500 tick range, it's not too bad. This one is around a 700 tick range. Shorts down here is around 650 range, and to this wicks is around 200, 100 tick. It's not too ideal, but this is pretty tough because we are, like I said, in a range, and within that big weekly range we have a smaller daily range, so it is what's making these two price ranges so small to trade. Okay, but if you want to be like Brian, like what's the ideal areas I'm looking at, you could wait for buys up above this level, and as well as shorts down beneath this level right here, as that's the ideal play. This is also possible, so any closures above here we could see price retest this week, but shorts down into here I wouldn't say are too ideal because this isn't too big of a range. This wick fill is almost 400 ticks, so not too bad, so you could definitely see something like that play out. So just a bit of a recap on the federal funds rate. The market saw a rate cut of 50%, and I'll just give like a quick summary of what we saw and why price kind of reacted this way. Well, I don't exactly know why, but there are a few theories on why I think this happened. So normally when we see a rate cut, we see the currency weaken because the money is not going to flow into other asset classes like stocks or maybe into other countries, because when the currency's interest rate is decreased, it makes it less appealing as an investment in terms of the currency itself. But like I said, we didn't see that large factor coming in to push the markets lower. Instead, we just saw a big range. So what I think happened or happened or will happen is that I think the markets have kind of taken this rate cut into consideration, and it has already been repriced accordingly, which is why we're not seeing any large momentum coming into the markets, right? So with this in mind, I am not exactly too sure if the rate cut is going to have a further short-term impact on the DXY, but of course long-term, definitely we will likely see the dollar head to the downside, just because it normally takes a while for fundamentals to kick in. It could be like a week, it could be 2, or it could be even a month plus, but long term we could still potentially see a bearish dollar, just according to the rate cuts in itself, right? But understand that with this in mind, the other asset classes that are in some way correlated to the DXY, like the S&P, the Nasdaq, the Dow, we could see them pump up in price now because the money is going to flow into those asset classes. All right, so that's pretty much what I'm thinking is going to happen. So later when I break down the S&P, let's see if we can see any short or any early signs of the asset showing a pump up higher, right? But as of now, this is showing me that the market has already digested and priced in the rate cuts even before it was announced. People were all reacting to probably just short-term panic selling or panic buying. So let's see where it brings us. But looking at the economic calendar for next week here, we have Monday news, Tuesday news, no news on Wednesday, and Thursday, Friday we have news. So high impact news pretty much throughout the week other than Wednesday. So depending on how we trade on Monday and Tuesday, we could see Wednesday as the consolidation before that large move on Thursday and Friday. If we expect a bearish dollar, we could see Monday, Tuesday trade up, and then into a key area. We could see when we could see a range during Wednesday, and then Thursday and Friday could see a continuation downwards. But I don't want to predict and say we're gonna go up or down. I just want to see how we trade and close above or below any of these levels, right? So interaction is still going to be the key factor for me in determining trade ideas. Okay, so keep in mind of the rules with TRADEXPROP's new trading rules, and make sure you do not blow your account over something as silly as a news release trading rule. Okay, so Monday, Tuesday, definitely a big range day in anticipation. Wednesday, likely a range or just protracted move higher or lower. Thursday, Friday also likely to see large momentum coming in. Okay, do note that this is in Malaysian time, which is GMT +8, so do adjust that to your own time zone accordingly. So that is the DXY. Moving on to my favorite pair, gold. Okay, so here we have gold, and if you see last week we actually did make another new all-time highs. If you saw my stories, I didn't really catch this move. I closed off somewhere early without catching this entire move, but it's fine. So here we have the monthly chart on gold. Let's see what we can break down. And to be fair, there's not much to see on the monthly, which has been strong bullish. If you pull up gold futures, we have also made new highs, breaking the 2.6k dollar price mark for gold. And with this in mind, when we're trading at all-time highs, I always like to tell people just to trade intraday, short-term scalps or whatever, and you can hold very, very minor positions, to maybe make higher highs or to kind of forecast or predict that retracement lower, but only very small portions of your original positions. Your main bulk of your trade should still be taken off at intraday or short-term scalp targets, and they shouldn't be held for the long run, because we don't want to give away money to the markets. We want to just take our piece of the pie and then be happy with it, especially when you're trading something like a prop firm's capital, because you can get a sick return with leveraging our capital. So with that in mind, sure, leave your small runners, but long term, still be wary of closing out and taking profits from your positions, right? There's not much on the monthly right now, other than the fact that we have one more week until the closure right here. So let's wait until then. Key area as of now is still around the 2327 price mark right here. Drop it down to the weekly time frame. I told everyone last week that you should still be expecting a higher high and a higher low, as long as you don't disrespect the previous week's low around 2485. And of course we saw that. We saw price come in, we opened, we pull back, made a low, and then we opened to close higher, right? So we are still likely to follow suit until we see price come down to break this low, where that would already see us form a new resistance up top to come down and push lower in form of a retracement, right? So everything lower right now for me is still going to be a retracement, especially when we see the DXY receiving a rate cut. We should still be expecting higher prices on gold. So any resistances that we form and we still push lower is going to be a short-term bearish retracement for me within the overall larger bullish leg higher. Okay, so as of now, still key areas on the weekly is still 2497 as well as 2414. There's not much to be seen as of now. I want price, if we were to form a resistance next week, I want the week after the next to break, and to break the previous week's candles low, and then we can take shorts down. That is horribly drawn. Let me just redraw that real quick. I want to see something like this happen, where we break this candle's low and then we continue to push down into this price point right here, or maybe even this, but we will know once we come down to it. So around this price point is where I expect my next area of support to be formed if we were to come down to it. But even then, you know, if we were to tank from where we currently are, this is still a 1,000 pip range, so you should definitely be looking to take any potential short-term shorts from here. But you might want to dial down your risk, because technically if you were to take a short, you are betting on the market making a top, and that's something you don't want to do with gold. Okay, so that's what I'm thinking. If you were to come down here, you know, I want to see if we respect it to go higher, or if we continue breaking down. If we continue breaking down, then I could potentially see, you know, shorts down into 2414 as the area of interest. Right here we have resistance, price broke it right here, came down to retest it as support, so this is why I chose this level. The issue now comes with, if we break beneath 2414, we are going to be caught within this this large range right here around 2414 to 2294, which is around, like I said, 1,200 pip range. It's still fine in terms of the intraday short-term time frames, but in terms of the weekly, it's a mess, right? Because there's way too many supports for you to take longs from. Like if you take a long here and then it breaks, you're like, okay, well, we could come down here, and then you take a long here, it breaks, and then you would have, you know, gotten stopped out 2 times just based off of the abundance of levels right here. So it's a mess for me personally, because we just saw a big range around this price point. It's a bit risky for you to point out structures like this. But so I'd say if we do see a big retracement lower back into this range, I would prefer to wait for reactions to any of these levels for any long-term swing ideas, right? Short-term ideas, whatever, but long-term swing ideas, I want to wait for confirmations. Okay, so let me just clear all of these away. So as of now, where we currently are, coming back down to this level, I'll see if we reject it or respect it to go higher. If we break it, we have clean traffic down pretty much to 2414 or maybe to 2442, depends if we come into this level to push higher or not. But as of now, this is the better area of interest, if that makes sense to you. There's just more price action, more structure right at this price point, so we could come down here. If we do continue to go higher, then, you know, just keep on buying and following the trend, because it is all-time high, so there is no price action on the left. You know, you could just base it off of the $10 or $5 increment, you know, things like 2670, you take a long into 2675, you know, things like that. So that is gold on the weekly. Moving on to the daily, you know, same thing. We're still making all-time highs, we're still making higher highs, higher lows right here. If we do see daily areas of resistance being formed right here, the same theory applies like we saw on the weekly. We could see short-term sells down into 2559, or maybe even into this structure point right here at 2582. Okay, right at this price point right here. But if we just keep on, you know, so if we come down and then we form another support, then you should probably be taking or looking to take longs into new all-time highs above if we break the supports candlesticks high. Okay, so that is what I'm seeing. If we do close beneath 2559, then definitely clean traffic right here down into 2524, which is around a 360 point range right here for you to play with, right? So definitely keep an eye on gold next week. I'm curious to see if we can continue pushing higher or not. Okay, so that is it for gold. because it is at all-time highs, the strategy is pretty much the same for any other asset class at all-time highs, which is just to, you know, be patient, keep on buying alongside the obvious trend that we're in. Don't call tops, but if you want to call tops, make sure you either practice proper risk management or just simply reduce your risk. Okay, so that is gold. Now let's move on to our final pair, which is the S&P 500. So S&P 500 monthly chart, we are currently here, one more week until the candlestick closes. Same thing, what have we been doing before this point? We've just been pushing higher and higher, and currently we are respecting the money support area of around 5481. You know, why is this a support? I thought supports were supposed to be down up. I mean, that is the more obvious areas of support, yes, but see how price found resistance here, and then price broke it, we came back down, found support right around this area with these long wicks right here. That is still showcasing to me, at least, that there is something within this price point right here, because if you were to take this support right here, it's like like 7,000 ticks away from where we are, which is a really large range, so I won't draw that right here. But this is, do note that this is just a rough area on a monthly. To get a better gauge, I want to go down to the weekly for a better picture, but as of now, just on the monthly, new all-time highs once again, and you know, we could see pullbacks, we could see continuations higher. Let's see what we can kind of find on the weekly. So on the weekly, last week I told everyone on the outlook that we could see a potential break above this level or a rejection to go lower. So we saw price actually break and close above 5643, this resistance right here. Price broke and closed above it, meaning now we have made all-time highs once again. And if you look to the left, we actually broke above all-time highs quite convincingly. So as of now, my bias is still bullish on the S&P 500. I don't see any reason for price as of now to do a really quick retracement lower. Even though we could, I will still continue to look for longs to make new all-time highs, as well as as long as we respect the previous candle's low. So target for next week definitely is around 5747 on the ONDA data feed. But I am also, like I said, I'm also aware that we could definitely see this move up here as a liquidation of the orders above here, and we could see a fake out where we close back within the range of 5643 to 5393, and then we could continue to play within this range, right? So if we do see that fake out this week, I am going to be looking if we can take shorts down into the next area of interest, which is 5393 right here. Okay, but as of now, still predicting the markets are going to be looking like this, and I will follow suit until we see a different story being painted. Okay, so going down to the daily right here, we are seeing price kind of stagnate around here last Friday, where price closed bearish and a resistance around 5723. Now looking back at previous structure, we are coming quite close to 5674, which is the previous, 5680, which is the previous all-time high. So just based off the candles body themselves, you know, we do have some clean range within here, around a 800 tick range. So definitely if we do break this candle slow, I could see short starting to this area, and if we break this candle, this support right here, we do have clean range all the way down into around 5390, and even if we don't reach this price point, the middle of the range is still around 1000 ticks away, so it's still pretty good. And if we do break above this level, you know, we are going to be making new all-time highs once again. And using the same logic that we applied on the gold chart, you could see price continue higher, well, with maybe like $10 increments or $20 increments, depending on what you think logically makes sense, because there really isn't a one true and correct idea on what to target when you are making all-time highs. Okay, so be aware that this could be a sign that we are going to be slowing down, but this break beneath 5637 for me would be a better signal for price to do a short-term correction and retracement until we've come down and we form some level of support, and then we break it, and then we break it right here. Then I'll be looking to take longs once again to retest this high right here if we don't break it next week. Okay, so yeah, that's pretty much my outlook for this week. Do keep in mind that the econ calendar is very important. Always keep in mind of the news releases that we see next week, which is Monday, Tuesday high impact, Thursday, Friday high impact, Wednesday no news on the US dollar. So yeah, I'll be curious to see how we react long term, at least to the 50 basis point rate cuts, because we haven't seen this since 2020. So it's been 4 years since we've seen this level of rate cuts, and I'm curious to see how it will affect other asset classes like the S&P or even gold, because we are at all-time highs, and in theory, we should be seeing the markets push these asset classes like gold and indexes higher, because we are going to be seeing a weaker dollar, and money in the markets are going to be flowing from the dollar back into higher risk assets like gold and the S&P. But we won't know until we actually see it. While recession risk they do remain, I don't personally expect it to hit hard this year. We are in the final quarter, of course, and with the election approaching, we could see a possible Santa Claus rally, which is a good setup for indexes and other high risk assets. Okay, so do keep in mind for that. So that's all for this week. I will catch you guys in the next one. Peace.